Oh, yeah. Once again, back is the incredible Rhyme Animal. Good morning. You guys ready? Don't forget to answer the poll. Let's go. Dum-dum-dum. Hey, welcome to my office. Sorry it's so messy. I've been away a while, but I'm back and I got a bigger get. Hey, man, the snuggle is real. Huh? What do you think of that? Gorgeous. Happy holidays. Happy Thanksgiving. We're going to have a shortened week because of the holidays. So bear that in mind. But welcome to my office. My name is Wayne. I'm a currency trader just like you. Today we're just going to burn through some fundamentals. I already covered that a couple of hours ago at traders.com. But at Forex.Today we're going to focus on on the charts a little bit. We're going to look at the most reliable, repeatable patterns and see what is out there. But even then, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So let me know, right? Let me know what your thoughts are as far as the risk profile of the market today. Are you going to be risk on or risk off? By the way, it's anonymous. And that means you can actually learn something about how the rest of the market feels. In particular, well, retail Forex traders just like yourself. The more you're honest, the more that this benefits everybody. So this is actually a gauge, if you will. It's a market sentiment gauge. So please answer that. Once we have a few more votes, I'll let you know what your contemporaries think. Now my calendar's not working, but I'll tell you that there's nothing on the calendar today. And tomorrow gets a little more interesting, right? We have our ADP. We have a bunch of things: retail sales, PPI. So good. How much of it is real and reliable? And you know what? Let's just gather data. Whatever. We don't need to be master debaters. This didn't play. You know what? My voices are down too. This is down and my voices are down. What? All right. Well, I'll take a look at that. Just quickly, we can take a look at the risk radar. And we will see what you think of relative to this incredibly in-depth analysis of risk. And today, no so good, negative 7.1. That's quite bad. Doesn't mean today will be bad. It just, that is what it has. What it is. Things were quite bad more recently, just plain old bad. But things are not as bad as they were. And again, this doesn't tell you what's going to happen today. But the, I guess, rumor on the street, if you will, the word on the street is that now the Fed is more likely to cut than last week. And okay, and maybe that had to do with the weird NFP on Thursday and so on and so forth. Okay, this is very complex. Now, to get this number, this is some of the math that we've done to get that score. It's a lot, my friend. WTI, 10-year, investment grade corporate bonds, high yield corporate bonds, gold, silver, dollar index, stacks, Dow, Nikkei, NASDAQ, S&P 500, and the VIX on multiple time frames with multiple scoring. And it actually even, or I should say weighting, and then it even looks at not just like what the 10 and the 2, but which you could look at it, the spread or the slope, but we're also looking at the entire yield curve. So even things that you don't see on this table are going into our score. So right now, up until now, it's been quite bad, but it is slightly improving, and it looks like most of you, 60% of you, are slightly risk on. And that would be an indication of this. And notice we're at negative 7.3 and we were at negative 8.6. So, maybe this goes from, strongly risk off to slowly climbing back to neutrality. Cool. So, it doesn't seem like you guys are massively wrong or anything. Part of what you should do in this is also look at like things like seasonality, but I've already covered this earlier this morning, so you should know, you should know things like that, right? Cool. So anyways, let's get on with it. Okay, we're going to go to our technical pattern recognition tool. And this is what I do at YouTube. So, like, if you subscribe, of course, you have all this power at your fingertips. But what I like to do for the YouTube is just hit the things that are most important to the audience. So we'll look at euro dollar. We'll look at Bitcoin. We'll look at the 10-year T note. That's a really good risk on, risk off gauge. We'll look at gold. We'll look at the S&P 500. We will not look at scalping patterns. We will look at, let's say consolidation and trending patterns. Okay, Fibonacci doesn't work in consolidation, just so you know. And then we'll get rid of these and these. Those are just sort of glitchy, or not glitchy, but interesting, but too late. So I'm just going to narrow everything down to trending patterns and consolidation patterns for these assets on 5 different time frames. Hey man, not bad. It's a YouTube live stream, yo, not bad. Okay, so for euro dollar, bearish, so that's weakness with a threat to bear. Same thing on this is the 4-hour. This is the 1-hour, bearish with a threat to bears. So you might be a bull and thinking it might reverse. It's more like if it comes up here, then look for a pullback and then long and gone. And that would be a Fibonacci pattern. Well, this isn't one. This is a trend pattern, right? But anyways, and now looking out to the daily, it is still bearish. Now, I want this to go up. But as much as I want it, there's no reliable, repeatable pattern that says that's likely. Now, it might happen. It's just not probable. You'd be gambling. Degenerate gambler trading on what you feel. Well, that's no so good. So take a look at crypto now. Crypto, crypto, crypto. The only pattern we hear is a bearish pattern on the 15-minute chart. No, no 30-minute chart, no hourly chart, no 4-hour chart, no daily chart. So if you want this to go up, that might be good for you, but it ain't going up yet. Now, how do you use all this? Let me take a pause here. Why is this interesting? Well, like if we go back to euro, let's say you wanted to sell these things, then you would look at the time frame you like. For example, if it's going to fall, it shouldn't make a higher high above here, right? Like, let me get my drawing tool. If you were a bear, it should not get higher than that, correct? In fact, let's clear that out and say, well, really, it's this area here. So if you were a bear, you would say, okay, well, maybe on the 4-hour, there's an opportunity. It doesn't matter that there's an arrow up here. That's if it breaks, you do that. Well, it hasn't broken, so it's too early for the bulls to get involved. Okay. So for bears, you can say, well, what if it fails here? Yeah, then you might have that in play. Well, hoorah! So anyways, not a lot, actually, because the market is just opening, so we don't have a lot of opportunities. Now, taking a look at the 10-year T-note, both these are daily, so they're different patterns depending on how zoomed in and zoomed out, but it's the same time frame. And what we want to see is price up, yield down. That would be risk on. That would make your euro dollar go up. So you have to understand the relationship. Now, I've added a correlation coefficient page. Did you know that? Yeah, we have a so if you don't know what the correlations are, well, we now calculate them for you. Cool. So anyways, what does this say? Well, look, that's a pattern. You're like, well, Wayne, how could it have two different patterns? Well, I would analyze it this way. If I were me, I wouldn't care of the slight difference here. To me, it's sideways. All right. So regardless of your bias, how do you trade sideways? Okay, break, pull back, long and gone, or break, pull back, short and gone. Okay, that's just a breakout pattern. So again, it's a pattern. If you don't know how to trade the pattern, like forget about it. It's all, So you need to know how to trade. So again, these are not predictions. These are just patterns that may or may not be forming. So really, a descending wedge is bearish. It was supposed to do this. Now it's not, so that might be an opportunity for bulls, but it's still too early. Now, what about this Gartley? Okay, what it's showing you is this is possible. If it was going to reverse and drop, now I want it to rise, so it's either a threat to me or I wait. See, a bull, what they want to do is catch this. A Gartley says, oops, back. A Gartley pattern says you have the down, a 3-wave correction, and then down. One, okay, like that. So you're doing Elliott wave, which is a form of Fibonacci, which is a form of price action. That includes multiple time frames in this analysis and whatever. So if you like Elliott wave, look, you have a technical analyst watching the 10-year T-note 24 hours a day looking for things like Gartleys and triangles and head and shoulders and channels and channel breaks. Isn't that cool? And all the assets, you might be tracking all these assets. That means there's, let's say, just I'll throw a number out, 10,000 possible opportunities or threats that you now are watching 24 hours a day, 7 days a week. I suppose 5 days a week. You couldn't do that before, son. Now it's easy. And now we're looking at gold. Okay, 15-minute chart. How do you read this? Well, what I teach, and I believe the description is in the just below the video, but we use SWOT analysis, right? Strength or weakness, opportunity or threat. This is straight out of business school. If you've ever taken entry-level marketing, undergraduate marketing, this is one of the first things you learn, SWOT. Okay. So this shows strength because it's a rising wedge. That's it. Done. Okay. Strength. A rising wedge is not bearish. You know what I'm talking about? Okay. The next leg is likely to be up. It's not a prediction. It's just a pattern. Well, then that's an opportunity for bulls, right? Cool. What does this show? Non-direction with the potential of down. So this says strength up until about this price. And then it's kind of non-directional. So again, I wouldn't call it an ABC. I'd call it consolidation. Okay, I'd call it consolidation. What do you call this? Consolidation. Is it strength or weakness? Neither. Since it's neither, there's no opportunity or threat. Cool. See? We just went through a 15-minute chart, a 30-minute chart, an hourly chart, a 4-hour chart, and a daily chart, looking for dozens of different patterns, and these are the three we found. Maybe there's more. Let me scroll down. Oh, there's two more. Triangle, non-directional, pennant. Ooh, that's interesting. So I would put this down on the maybe list. Daily. If you're a bull on gold, you might want to look for this to do what? Now, if that happens, how do we read into that? Well, it becomes a bullish trend. Okay, so let me draw this out. If that is true, then we could probably turn this into something more like this in the future. So it would be up and then down off the role reversal. So let me redraw it now. Let's refine our analysis. Hey, by the way, if this is good, please click the thumbs up button. Tell YouTube this is good. Okay, now you got this. Okay. Cool Modi, huh? So all you do, remember, this isn't technical analysis. It's just pattern. So if you can see this and you're a bull and you can see it potentially turning north, and in particular, if the Fed is more likely to cut interest rates in December, I think the last time I looked it was 70. So if we're on our way to 80% chance of a cut, then the dollar would weaken, the value of gold would go up, and you'd have this move. So all I would say is, if that's what you think, now you go to your gold chart. And now you can take all this other data and filter it through your bias and do proper technical analysis. Where's the monthly pivot? Where's the weekly pivot? Where's the daily pivot? So that you have entries and targets and places to put stops. And okay, this just says, look at this, don't look at that. Okay, it's saving you a ton of time, probably hours a day of randomly looking through your charts. And then here's our S&P 500 today. Butterfly emerging. doesn't look good. Even a higher high brings us back down. So until it breaks, I'm going to override the Gartley. I'm not against Gartleys. I'm just not a fan of them. I just don't naturally see them as well as Aiden does. So I would say I'm going to treat it as consolidation. And I'm going to let the big boys tell me direction. So if we kind of go here and then up, back, then I buy the dip, and then I'm going to benefit this way. Okay, 30-minute. It's not a long-term chart, so it's not great. Okay, again, we don't have a 15-minute chart. We don't have an hour. We don't have a 4-hour. We don't have a daily. So again, very consolidative. Triangle, non-directional. So again, how do you treat it? Well, I would treat it just the way I drew before. If we break, catch the pullback, long and gone. Cool. So we just analyzed at least 5,000 charts. What do you think? We just analyzed 5,000 opportunities or threats. And it shouldn't take you more than 3 minutes. I took my time. And then it's going to save even more time if you're like, well, Wayne, like, I love Forex. I also trade Ethereum. You're interested in what you like Meta, you like Microsoft, you like Nvidia, you like Amazon, you like Apple. Okay, cool. Maybe you like Tesla. You like trading Tesla. You hate Tesla, but you used to love Tesla. Now you hate Tesla. Or you just like to trade it and make money, right? You like oil. Let's put it in there. Yeah, you don't like NASI, you don't like FTSE, but you want to trade NASI. Yeah, that kind of stuff. Then it'll save even more time. Okay, saves you time. Cool. So if you're a subscriber to TRADARS.com, we need to do our nooner, right? Noon? Andre says, yeah, pound Swissy. Yeah, it's probably a good one. Okay. Now remember, if you're only starting your trading now, you're way too late. You're hours late. Just a heads up. But if you're like today, so one tool to use is you've gone through our fundamental section and our sentiment section earlier today. Again, you should know you're hours late. If you're just starting, I can prove it to you you're late, but whatever. You analyzed the sentiment and you analyzed the fundamentals. So you've already done your macroeconomic comparative analysis, and you said today, pound Swissy. Okay, Andres? And then you're like, I want to know everything about pound Swissy because that's my major focus today. Sweet, love it. Good process, love it. So now you go to your pound Swissy. Okay, bullish with an opportunity. Don't be shocked if we start to develop a pretty gosh darn big pullback and then buy it back or kick it off here, but it's in between consolidation and reversal to the upside. So this one's not so good. It's not great. The hourly's fine. If we look at pound Swissy on the 60-minute, we're at resistance, and that's what this is probably telling us. So now we got to get above 106 to really trend this up on a higher time frame. 15-minute, slight bullish opportunity. 30-minute, slight bullish opportunity. 60-minute, slight bullish opportunity. So there could be a longer-term threat here from C to D because of this massive resistance right above us at 106. Dude, it's so easy when everybody's trying to please me, baby. It's so easy when everybody's trying to please me. So anyways, Hey guys, yo, yo, yo. We got a nooner today. Oh, that's broken down. Oh, I wonder what bunch of things went glitch on us just in the last hour. I wonder what will do that? It's not. So is this going to load? No. Glitch.
Euro US dollar forecast. Euro recovery consolidates but remains fragile.
U.S. stocks are set to open higher.
Euro at pound steady as UK budget looms. German IFO data limits euro gains. US dollar Swiss franc technicals. The buyers and sellers are testing a key area that could shift the bias.
U.S. stocks may extend last Friday's rebound in early trading. U.S. dollar index, DXY, technical outlook, pivotal week for the U.S. dollar as acceptance above 100.01 remains key. Rate cut hopes lift market sentiment. The U.S. dollar is mixed to kickstart the NA session. The U.S. dollar is lower versus the euro and pound higher yen. Cool, right? Yeah, and there's what they're talking about. We just crossed 100. No, it's not $100. Whatever. um, yeah, so it just crossed up, and we just got that on our headline radar, our squawk box.
Euro.
Right? So that's cool, right? Cool. And thank you for your time and your attention. Please subscribe, like, comment. Oh, yeah, and I was supposed to show you this. Oh, yeah, and it doesn't load. See how you... Well, that might make it tricky then. Well, I would suppose we'll have that all taken care of, tickety-boo. But today at noon for TRADARS, we have our day trading session for planning tomorrow. Yeah, dude. We do that on Wednesday. That's what I'm trying. Let me follow up with the previous comment. So at noon, if we're planning tomorrow, why am I saying if you're just logging into New York now, it's too late? You're already behind. You're already a follower. You're certainly not a market leader. Look at, like, for example, Euro Swissy. Doesn't matter if you track this or not because they're all going to be about the same. What I'm suggesting is the best, one peak time of the day is now, and we lose volume and volatility the next several hours. You're supposed to be trading here. So guess what? I meet with the team here at 6, and now that we're rolling into New York, you missed. You're like hours late. It's incredibly late. So just be aware. Okay? Volume and volatility matter. And today is a pretty decent day. Tomorrow's an even better day. And by Wednesday, if you're swing trading, which means if you buy on a Friday dip or a Monday open, on this particular asset, which is Euro Swissy, you probably are taking profit around Wednesday. So now you even have the swing. Buy a Friday low or Monday low and ride it up into Wednesday. And if you're slamming into a pivot target, odds are you should probably take your profit. And everybody else just trades blind. I kind of feel sorry for them, I guess. Let's swing on by traders.com, huh? Make better decisions. Peace on earth. May the pips be with you. May our profits be above average.